Okay, we're going to talk about 3 ways to protect your money if the stock market crashes. With coronavirus going crazy, the market dropped faster and deeper than it had since the last complete meltdown back in 2008, 2009. So a lot of people are wondering, what do they do if the market crashes? How do they protect themselves? First one is add stop loss and or stop limit orders. Now this is for money that you have that you do not want to take out of the market, and a stop loss and a stop limit order, what they do is when you buy a stock you can put these on, but you can even add them after the fact. And what's great about it is, like on a stop limit order, what that does is as a stock is going up and up, and an example would be like Amazon stock the last several years has went up and up, the amount that it will sell at as the stock goes up, it goes up with it. So it trails the stock. So it's a really good thing to put on stocks. Unfortunately, a lot of advisors, for whatever reason, I don't understand it. I talk to advisors all the time that don't use stop loss or stop limit orders. The one thing that you need to understand, though, is that you want to make sure that the spread between, like, say the stock normally trades between $10 and $15 a share on just normal trading. Well, you want to make sure that your limit order or your stop loss order is basically going to still allow it to trade in a normal range. The only time it would trigger a sale is when it got outside of that normal range. The other point with those is that you want to, if you have a large holding or all your holdings are pretty large and you don't want to, trigger an order and sell the whole block of, Amazon or Netflix or whatever the holding is, what you do is you actually can do it with percentages of the stock. So a lot of times what we do when we set them up for clients is simply, 10% to sell at this, say the stock drops by 15%, we're going to sell 10%. If it drops by 18%, we're going to sell another 20%. So you can ease your way back out of it, because as you know, in today's markets, they move super fast, and you don't want to dump all of the holdings just because it dropped 15%. So those are the thoughts on that. I'm actually going to put in the comments on this, I'm going to put a link to a decent Investopedia that has a video and a little bit more about stop loss and stop limit orders. And again, if you have questions, you can contact us and we'll let you know, any information you need on that. So number 2 in the 3 ways to protect your money in case of a stock market crash is rebalance your positions as gains and losses occur. There's been a lot of gains in the last actually the last 3 or 4 years. A lot of times we get complacent and forget to start rebalancing that portfolio. In other words, you don't want it all in it. Maybe you had one stock that just did really, really well and everything else did average or not good at all. Well, you've got to rebalance to protect yourself when the market does crash. If it crashes. I mean, eventually it's going to crash. We hopefully, it's going to correct. I don't mean to suggest that there's crash, but there's high probability that anything could happen up or downside. So number 3 is super important as well. Be prepared to move to cash and stay there if needed. What do I mean? Well, if we have another meltdown or another stock market crash, you want to be able to get the money into cash if you do not have stop loss or stop limit orders, which are going to automatically sell at predetermined either percentage or prices. But be prepared to switch to cash and stay there. A lot of people just stay invested all the time, no matter what's going on, even in a free fall. That doesn't make any sense. Many I will say this, many investment firms are pretty great at offense, but often, almost always drop the ball when it comes to playing defense. And I want to remind you that it's just as important to protect your money from market crashes as it is to grow it when the market's rising. It's like that old Warren Buffett saying, you find out who's swimming naked when the water comes back, when the market recedes, just like on a beach. If people are swimming out there naked and the water in low tide, you see who's swimming naked. Well, in the stock market, without stop loss, stop limit orders, without rebalancing positions, and without being able to be prepared to move to cash, those are the people that are swimming naked. And I will say on number 3, that is one of the huge downsides of like mutual funds, because they basically have to stay invested regardless of what's happening. And they're not flexible is what I'm trying to say. So anyway, that is the 3 simple ways to protect your money if the market should crash. And they're also good little pro tips, if you will, regardless of what the market is doing at the present moment, because today's markets, most of the trading is done by algorithms that have already been pre-programmed in. They're done by computers, so the trading is super fast and anything can happen. This is not the 80s. This isn't call your stockbroker. This is the trades are happening like nobody's business. And, proof of that last week, heck, the last hour of each of the free fall days, there were some of the days it was up there was one day in particular, it was up at 12:30, the market was up and then ended up down almost 1,000 points. That's what can happen when, the algorithms kick in. Now, does that mean sell everything? No, but it means stay flexible and stay able to do different things as needed. The only thing I would add in closing is, we are in an election year. This market's going to be probably really crazy all the way through the election. It might be a good time for some folks to look at alternatives even to the stock market altogether. And if you want some more information on those, again, the information is in contact information is in the description. But there are alternatives to the market. The market isn't the only place that's doing well at this point, but there are alternative investments that don't have the same sort of risk factor, if you will, that the stock market has, especially in an election year. So with that, I hope you got some value from this. This is John Duncan, and I'll talk to you soon. Thank you.